I think that's always something that's really important you do as an investor is to audit. Like as investors, what's our inventory? Well, inventory is our assets, but it's also our cash. Like, what is our cash? That is what I inventory. I'm like, how much cash do I have? Where can I put it? And, I treat my real estate investing like almost like a financial planner where I have like a pie chart.
Yep.
I go, okay, I have this much cash to invest. There's a couple different asset classes I invest in. One's long-term holds. Like, can I buy a rental property that's going to hit my minimum returns and create my minimum equity position expectations? Then there's flipping. Higher risk, I'm going for a higher return, 35% in 6 months, 70% annually. Then I do private money financing, where I will lend out hard money and make 12%, 14% on my money, and it's very, very passive for me at that point. So, each asset class has a different return for me and a different purpose, and they also have a much different risk. And so for me as an investor, my job every year is to audit, okay, well, how much time do I have to spend on these business? Where's the risk? What's my path to growth for my goals? And where do I want to put this cash? But it also comes down to deal flow. If I can't find deal flow, how do I reallocate that? Mm-hmm. And so that's why I think it's just really important to always know that, because flipping is really tight on the margins right now. And if I cannot hit my 35% return, and my option is to either lower my return so I can get into the market and start playing, and maybe that goes down to a 25% cash on cash return. That's starting to be more risky than maybe I want to take on. And then that's where I'll lend my money out at 14% because it's a lot less risky. So I can make half the return, but probably take 1/5 the risk.
Yeah.
Because the thing that I never want to fall into is there's no deals in the market.